Hi, everybody. Thanks for tuning in to my channel, Living in Tampa, where it's my goal to show you everything you need to know about eating, sleeping, playing, and living in the greater Tampa Bay area. Hey, in today's video, I've got a very special guest with me. We're going to go over something that I think is super important that I get asked about all the time, and that is, are there any first-time homebuyer programs available to me in Florida? So if you would, welcome Christine Wilson from the mortgage firm. Thanks for joining me.
Thank you for having me, Victoria.
Good morning. So first of all, I think it would make sense to go over what a first-time home buyer is, because there are some misconceptions about that. It doesn't necessarily mean it has to be your very first time buying a home, right, Christine?
That's right. So there are special programs out there for people who have never owned a home ever, or if you haven't owned a home in 3 years. So that's pretty much the simplistic definition of a first-time home buyer.
So 3 years, yeah. So you could be your second home, your third home, whatever, as long as you haven't owned one in 3 years, you could still qualify for these programs. And there are quite a few of them available, and we're just going to go through them kind of step by step, each one. And I think the first one we're going to start out with is what's called the Florida State Bond First-Time Home Buyer Program, right?
Right.
Can you tell us a little bit about that one, Christine?
Yep, and you can go on the Florida Housing Finance Agency programs. Florida Housing is a huge, it's a purple, their logo's in purple. You can Google this. Florida Housing gets money from the state to fund some of these down payment assistance programs. So these are quote unquote down payment assistance programs, and down payment assistance you're going to have your first loan with a lender like us. Your first loan is with us, and then the down payment assistance is a second loan, and
Okay.
then there's different terms on that second loan depending on where you get that down payment assistance. So there are a few different ones. There's the ones from Florida Housing, from the state, and then also there's the county down payment assistance. So your county might have different down payment assistance programs available. So you can always go on to your county, Hillsborough County down payment assistance programs, Orange County, Duval County property, whatever county that you're in, you can Google those, and those counties also have down payment assistance programs typically available. And they're all different all over the state. So
that's a great point. And I do want to point out, a lot of times when you're Googling stuff like that, it's easy to get misled and get onto some kind of commercial website. So yes. I will post down in the comments for the various counties around the Tampa Bay area. If you're interested in what those counties have to offer for first-time home buyers, I will post a link to those so you don't get accidentally clicking on something that's not legitimate.
That's a very good point. But yeah, I think going back to the broader is that the state has down payment assistance programs, the counties have sometimes the cities even have down payment assistance program. So there is a lot that's available, and doing your research on what programs that you can qualify for is what's really important. And I also say with the down payment assistance programs, what's really important to know is that it is always based on a need basis instead of a want basis. And if you can keep that in mind when you're thinking, I wonder if I would qualify for down payment assistance. If you need it, you'll likely qualify for it because it's based on income and it's based on some other factors. If you just want it, it usually is not going to be something that you're going to actually qualify for. You either make way too much money for it, or some other reason, or you already owned a home that you could have sold for that deposit on the next house. And so I think that's a big thing to think about with down payment assistance. And then the other option is the Chinoa fund. And the Chinoa fund is another word that you might hear out there for down payment assistance options. And so Chinoa is another down payment assistance program that you could qualify now. And I also say this is no down payment loans. So a good point to make while we're discussing this and to keep in mind with the viewers is that it's no down payment. This doesn't mean no out of pocket. So there is sometimes that you're going to still come out of pocket some money. I would plan on, it just depends on the whole transaction, but I would plan on somewhere between $3,000 to $5,000 of coming out of pocket. So you're still going to need some money to come out of pocket. So it's not a zero out of pocket loan. It's just a no down payment.
Right. Yeah. I think that is another thing that a lot of first-time home buyers maybe are not aware of, is that there is, closing costs involved and fees and things like that, that a lot of them are not expecting. I actually was just out with a buyer a few weeks ago, and she's like, yeah, I have my money for my down payment. And when I, made sure she knew about the closing costs, she did not. So that is definitely an important point to keep in mind. And I do have another video that I'll link here that is, how much money you actually need to buy a house in the Tampa area, your average home. But this Chinoa fund, let's go into a little bit more detail about that, because I think they have the FHA option that you can go with on that one.
Yeah, and you can go with the FHA option with pretty much any down payment assistance programs, truly. And again, it really is going to depend on all these options for down payment assistance. It's really going to depend on which ones you qualify for, because they all have different qualifications. They all have different interest rates. They have all different set terms on the second. Like the second could be forgivable after 10 years. It could be forgivable after 5 years. It could be a zero interest rate. It could be a low interest rate. And so I think making sure that you're very knowledgeable on what option that best fits you, and then taking those options and then diving deeper into what other options. The other thing that we didn't put on here, the Florida housing program, that is a big, everyone's talking about right now, is the Hometown Heroes program.
Right.
So I want to make sure that we discuss that. The Hometown Heroes is the governor has been working with Florida Housing to get these funds funneled into supporting the heroes of our community. And the cool thing about this down payment assistance program, because it really is, that's what it is. Kind of, some people kind of get, there's a lot of advertising out there, and people kind of, it's not advertised as a quote unquote down payment assistance program, but that's what it is. Available through and only through Florida Housing.
Okay.
And so, and what's really cool about this Hometown Heroes program is the breadth of people that it can service, which is because typically down payment assistance programs, they service a very small part of the population. This is servicing a much larger population. The income limits are way higher than the normal down payment assistance program. They're a lot higher. The what else? There's a lot, and it's not just teachers and nurses, it's massage therapists, it's people who work in chiropractor office. I mean, you can go on the website and you will see a ton of people. I mean, it is really people that help and are embedded in our community that are truly our heroes. And we need those people in our community, and we need them to buy houses, to root themselves so they stay in our community and they protect us when there's a fire, and they help us when we have to go to the hospital. So
very good point.
It is a really, really amazing program. And so I want to make sure that that's included. So those are just some of the programs that are available through Florida Housing, which not all lenders work with. No, so and that's another good point. Not all lenders work with all of the down payment assistance programs. They have to be signed up as a lender. In particular, this is a fun fact, that Florida housing programs, all the DPA is down payment assistance, all the DPA programs available through them, you have to work with an originator that is in Florida. Interesting. They want that business to stay within their Florida origination partners and the people. They don't want everybody from outside, the US coming in and doing this. And so it's very interesting. They made that very clear on our conversation.
Yeah, well, that's good. I think that's a really good tactic and way to do it, because that wouldn't be fair otherwise. And
well, and I would imagine it would, for them just managing, the amount of human beings that they have to work with, and because it is, and it's very, if you're not used to working with this program or any of the DPA programs, they have just a lot of little things that you have to look for, look at and make sure that something's not going to crash and burn at the end because of something that the loan officer overlooked at the very beginning because they just weren't familiar with it. So that's kind of like, in a nutshell, that's kind of all of our, you have the Florida state bond programs, which include the Hometown Heroes. And in addition, they always did the down payment assistance programs. And really, that's honestly one of the most popular ones. And then secondary are the county down payment assistance programs. And then you have things like the Chinoa fund, and you have some of these other specialty products. So, so if that kind of sums up down payment assistance.
Okay. And I mean, the main thing is finding out if you qualify, because that's not something that is probably easy for people to do on their own. That's why it would be good for them to reach out to you to see if they qualify for that and what, steps they would need to take. Now, I think on some of the county ones, isn't there a requirement for some of them to take some kind of class or something like that to
there always is on these programs. There's always education for the borrower. Almost on every single one of these programs.
On all of them.
Yeah, that you're going to take some education on it, which is awesome. Honestly, everybody should do it. Even if we bought a home again, there should be second-time home buyer education. It changes, and we need a refresher course.
Sure. And things do change every year for sure in the mortgage and real estate industry. So that I think that's good. So that does sum up the first-time buyer, but there are also a lot of programs out there for people that want to buy a home, but maybe don't have the funds for a down payment. So you've got the money for your closing costs, but you don't have the money for your down payment. And so a lot of these programs that we're going to talk about now are not really programs, they're loans. They are no down payment loans. So the first one is one that I'm passionate about, is the VA loan for our military members. But if you wanted to talk maybe just a little bit about that one, Christine.
So a couple things on VA. Yes, we love working for our veterans. This is a benefit for our veterans that is misunderstood a lot of times by veterans and the real estate community in general. But this loan is amazing. Some of the best interest rates, 100% financing. And if they have 10% service connected disability or more, they don't pay a funding fee. Funding fee is the fee that is assessed by VA. So VA, we do the loan, the lenders do the loan, we supply the money. The VA is actually insuring this loan for the lenders.
Right.
So that's what the VA office is kind of, they don't like to be called insurance agent, but they're insuring the loan for us. And that funding fee is actually the fee for that insurance to So
almost like a PMI, but for
but it's called a funding fee. They call it funding fee. It's not. They don't like that word. They like funding fee.
But
there's no monthly mortgage insurance. So there's no monthly mortgage insurance. It's a fee that's tacked onto the loan. So let's say the loan amount's $100,000. Depending on how many times you used it, the fee will be more if you've used it a couple more times. And so instead of borrowing $100,000, you would borrow $100,000 plus that fee, whatever your fee is, which is somewhere between 2 to 3%. So ish. So you'd just be financing a little bit more than that 100%.
Yeah,
so you can always put down money on VA loan and you can reduce that funding fee. So that's always an option. But honestly, it's almost like why you get some of the best interest rates out there, the lowest interest rates, because the VA is insuring this program for lenders. That's why you get those nice lower rates, because they're reducing the risk.
Okay,
if the borrower were to default on the loan, the VA is going to come in and insure that loan for the lender. And so in lending, if you reduce risk, then usually the interest rates come down or the fees come down. So that makes sense. VA is just love VA. I love that loan. It's very flexible. They're very forgiving, but again, if you're working with a lender that has not worked with a VA loan before, there's a lot of pitfalls with VA that like you have to calculate residual income with VA. You don't have to do that with any other loan. But
Okay.
you have to do it with, and sometimes lenders don't know how to do calculate that residual income, and sometimes that can be a reason at the very last minute why a VA loan can't go through. It doesn't happen often, but love me some VA loans. I feel like it's one of those benefits for our veterans that really helps them establish roots, buy homes, and it's great.
So yeah, the VA loan does, it sounds fantastic. And one of the other benefits that I read about on the little sheet you sent me is that there's no limit on the closing costs that they can get paid by the seller. So this was not something that we were able to do previously, but with the market shifting now, I think sellers are getting a little more open to the idea of maybe negotiating some things, one of them being buyer's closing costs. And again, as we spoke about at the beginning, it's not only your down payment, but you also need your closing costs in order to be able to get a loan. And that can be a significant amount of money. And we can ask the seller to pitch in for that. That's really great. And wow, no limit.
Is definitely a loan where the veteran could come. We could structure this loan where the veteran comes literally out of pocket with zero money, even paying for the appraisal. Sometimes they might have to pay for the appraisal up front, but we can get it paid for at closing.
Wow.
I mean, and we can even get the WDO paid and covered as long as they give us. They might have to pay for it up front, but then they'll be reimbursed by seller contributions at the end. So yeah, this is one of those loans where we can eat up all the seller contributions and have it all. It's awesome, and we've done that. We've done that with a lot of when the market where we have sellers contributing. It's such a feel-good loan because they deserve that. They do.
I mean, these guys have given their life for our country and gals too, so they definitely deserve it. And WDO, for those of you that don't know, is a wood destroying organism report, a termite report, which is a requirement for a VA loan that you have the home inspected to make sure there's no termites or other living organisms present on the property. But I do want to point out that even if you can get all of that paid for, if you are getting a VA loan, you are still going to have some money just for your earnest money deposit or your escrow deposit. That is usually about 1% right now in our market here in the Tampa area of the purchase price that is going to be held in an escrow account. Now, if you were doing something like that and getting everything paid for on your behalf between the no down payment and getting a seller to pay all your closing costs, you would actually be getting that deposit back at closing. So it would just be a temporary time that you would need that money, but you would have to be prepared to make that escrow deposit.
Yeah, so they can get their deposit back, they can get their money for the appraisal and the cost for the wood destroying organism or termite report.
That is so nice.
Yeah, they can get all that back if the seller is able to cover it all.
Awesome.
Yeah.
Well, that sums up the VA loan. And then another one that's no down payment that a lot of people do not know about is the USDA loan. Now, the USDA loan is limited geographically. So that's becoming a little bit more and more of a challenge, at least in our area, because it's mostly what they consider to be rural areas. Some of them aren't necessarily actually rural. It all depends on their map. But if you buy a home in one of these USDA designated areas, you can also get the zero down payment.
Yep, loan. This is a loan that's pretty similar kind of structured. They have like an upfront mortgage insurance and a monthly. Okay. This loan is kind of like a quasi between a VA loan and an FHA loan, but it does have income limits, and it also has geographic limits. So, and the same thing, USDA is the insurer of this. Money comes from the lenders for the loan, but then the insurance is coming from USDA. And this is to promote buyers to go out in those areas and choose homes in rural areas instead of the metropolitan. So yeah, and those maps were redone recently over the last 3 to 5 years, where they have, pushed out because of our growth. Yeah. So, yeah, it's important to go. The websites are pretty darn user friendly, but it's always good for a loan officer to do it, or loan originator to do that for you, because we're just so much more familiar with those websites, and we make sure that everything looks good. But the USDA loan is a great loan. I really, really like that loan. It's just a little bit more conservative. I would
Mhm.
say it's the conservative of the VA and the FHA. It's of the three loans that are insured by the government. The USDA loan is certainly a little bit more on the conservative side than FHA or VA.
Okay, and what about closing costs on that one? Is there, like, could they ask for seller closing costs on that too, for the seller
Yes,
to pay
you
part
know
of it?
what? I'll be honest, I haven't even done a USDA loan in a long time. Did a ton of them, probably, 8 years ago. But haven't done a whole bunch of them. But yes, the seller can pay. It's very flexible in that way too. Again,
Okay.
very I would say very, again, they're promoting, they want people to buy. They want to give people the opportunity to buy in these areas, and they're going to make it a little bit easier for them. They're not going to put a whole bunch except for the income and the geographical restrictions.
Makes sense. Okay, well, that's a great program for sure. And then last but not least on this list of the no down payment loans that would be available is if you were a medical doctor. So how does that one work?
So these are very specialized programs. Not a lot of banks offer these programs, or lenders offer this medical program, and there are some restrictions on these programs. You must be a licensed medical doctor in the state of Florida, and I'm sure other states have these as well, but must not have been practicing medicine. Okay, you can't be in the medical field for 10 years and then get a 0 down payment.
Oh, right. That makes sense.
So,
You should have some money to make the down payment by then.
yeah. These are, a lot of these are people coming out of school, where they haven't made their money yet. But, so they
Right.
don't have the money saved up, but they've spent all their money going to school because they can't have a job, while going to medical school. But they're making the money, they just have no money saved up. So that's kind of
Right.
where this program came from. And because there is such a need for doctors, and I mean, the chance of them not having a job or not getting a job is very slim to none, so and the student medical debt can be excluded from the DTI if it's documented and deferred for 12 months. So there's a
Wow.
lot of different things that that are a little bit more forgiving on these loans. It's 0 down payment up to about an $850 loan amount.
Okay.
Again, and I say these things, but they're not carved in stone anywhere, so they can change. So, I always tell people that's why it's hard for us to post things sometimes, because it could change 6 months from now if someone were to come back. And then
Sure.
if it's a bigger loan amount, you might be looking at maybe not a 0 down payment, maybe doing 5% if your loan amount is $1 million or more.
Okay.
And then there'll be some minimum credit scores associated with that program as well, just because of the high risk of the loan amounts.
That makes sense for sure. Okay, well, I think that sums up like the no down payment. But then there's another myth that we come across a lot in the real estate and mortgage industry, is that you need like 20% down to buy a house. And that is not true, right, Christine?
Or you need, or you should. Those are two myths in there, that you need to put down 20%, which is absolutely untrue, or you should put 20% down, which again, it depends. That depends on your financial situation. And it requires somebody. That's what we're here for, to give you financial options of how to best use your money in this real estate bank account.
Yeah. And so what is the lowest amount that people can put down, just like say on a regular conventional loan? What is the lowest amount?
And when we say conventional, what we mean is Fannie Mae and Freddie Mac. It's conventional. And that's 3% down.
3%.
And then there's 2 options available for that 3%. Again, when you kind of go outside the box, there'll be some restrictions. Just always know that. So we're kind of going a little bit. 5% is a very normal loan that we do all the time. Conventional loan, 5% that's available to almost, everybody that qualifies for that loan. But 3% is a little bit outside that box. And so there are going to be some restrictions. There's 2 programs for the 3%. You have to be a first-time home buyer to qualify for a 3%, or there's another program called Home Ready, Home Possible. Love this loan. Home Ready, Home Possible is now this loan is going to have some income restrictions based on your geographical area. Now it's not based on a geographical area, it's just the income is based on the geographical area. You can buy anywhere, but it depends. The income is based on wherever you're going to buy. And so if your income falls within the geographic in their range, it's the 80% of the area median income. And again, Fannie Mae and Freddie Mac have that's the two. Fannie is Home Ready, Freddie is Home Possible. And so these are, all this information is readily available for anyone to look at. You can put in the address of your home. You can find out what the area median income is to see if you qualify for that program. Absolutely. The reason why I like Home Ready and Home Possible is that the interest rate is just slightly lower than a regular interest rate. And then also the mortgage insurance is reduced. And so again, these are programs that were put out by Fannie and Freddie that are helping stimulate that income, that area income limit, area of that income level that might not ordinary, just making the entry into home ownership a little bit easier for
That's
those
great.
income.
Yeah. And I'll link that below too, the link for those, so that if you're interested in finding out more, you can just click that link below.
Yeah.
And then there is, of course, the FHA loan is the other option for a low down payment. If you want to speak to that one a little bit.
Love us some FHA loans. FHA, the history behind FHA is kind of interesting, where they came out, they were one of the first, where Florida Housing Associates, and FHA is another government owned entity that insures the loan for lenders to open up lending to people. And usually FHA loans are really great. What's great about FHA loans, again, very flexible with credit scores, no income limits on this one. So you can make $200,000-$300,000 a year and still get an FHA loan. And you don't have to be a first-time home buyer with FHA. There's a couple of limits with FHA. There are loan limits with FHA. So the current loan limit, most of the loan limits in Florida are going to be around that 420 mark. Again, you can get this information. There are some counties with higher loan limits, but most of the counties in Florida are around 420. I think it's 420, 680. It's always kind
of where they come up with these.
Yeah.
But.
Well, and the other thing with FHA loans, it is tough to do 2 FHA loans. Not impossible, but tough. Really tough to do 2 FHA loans. So if I have a house that has an FHA loan on it currently, and then I want to go buy another primary home with another FHA loan down the road, it's a little tough. It's not impossible, and there's a lot of things that go into that. We don't need to go into it on this call. I just want to bring it up. That's another kind of restriction of FHA. Right. They don't want to insure 2 primary residents. That's what their deal is.
That makes sense.
Again, it's just the government insuring loans for us lenders that help people get into home ownership. That's their main goal.
Right. That's what all these programs are about. And I love that, because it really does help people out that need it, especially the first-time home buyers. It's not impossible. You can get help, and it's definitely something that you should look into if you're thinking about buying a house here in Tampa. You can get in touch with either Christine or me. I know we covered a lot of information today, and it's probably got you a little bit overwhelmed. So I think the easiest and best step really would be to talk to Christine's team and kind of go over your unique situation, because everyone is going to be different in what they qualify for and what is best for them. So Christine, thank you so much for taking the time today and going over all of these with us. I always enjoy having you on my show. And
always a pleasure.
Yeah, thanks again. And we will see you guys next time. Don't hesitate to reach out, and please hit the subscribe button so you'll be notified every time that I release a new video. Thanks for watching.
Thanks.
Bye.